You use a trading journal for performance evaluation. Trading journals are the best way to get immediate and long-term feedback on how you're doing. Let's get into types of trade journals and what trade journals could look like for you. All information in this video is for educational purposes only. It's not offer a recommendation to trade futures, stocks, options, or Forex. This is for education. Maybe you're already trading and this is just some good, helpful stuff. So why would you use a trading journal? Well, pretty obvious. You want to track your trades. It allows you to record each day that each trade that you make. It includes the details of trades such as date, the instrument, entry and exit points, sizes, outcomes. It's obviously very important data, and that stuff you can add to that. We'll get into some of the details of what may be included in a journal, or maybe you just want really simple feedback. And then why do you want that? So you can identify your strengths and weaknesses. By regularly reviewing your trading journal, you can identify patterns in your trading behavior. It'll help you understand what strategies are working and where you might be making consistent mistakes. Your strengths and weaknesses, you could see, hey, if I'm trading during the first 30 minutes or hour of the day and I'm consistently losing money over time, maybe just stop trading then. It's hard because the market is so different every day and we always want to be a participant. It's easy to get very short term. Like if you had a bad day, just a reasonably bad day, not like a blow up day, but like just a reasonably bad day a month ago, you're probably not going to remember it because there's so much, I guess you only have so much memory and you just can't remember everything. You don't remember what day you traded well, and you're not keeping track of that. So you don't really have a way to identify your strengths and weaknesses if you're not keeping a journal, which ultimately will improve your decision making. A journal is going to help you make more informed decisions. By analyzing past trades, you can learn from your successes and failures. It's kind of what I was just talking about. I personally used to trade. I would sit there pretty much while the market was open during the day, while the U.S. hours. And I started using a trading journal and realized something, that during the lunch hour, we'll say from 11 to 1 p.m.-ish, I simply was over trading. My profit factor was a lot smaller. I just wasn't making near as much money and sometimes losing money during specifically those 2 hours. And I realized if I took out those 2 hours, I, one, would have more time to my day, but two, would have better trade metrics, ultimately having a better profit factor, making more per trade that I take. And I wouldn't know these things without journaling. You could have a guess or maybe a hunch of, hey, I don't trade well during this time, but the data is so important. And aside from the data, kind of the other side of journaling is the emotional management. Trading can be very emotional. Ideally, it's not. Ideally, you become emotionless and kind of become a robot, because emotions do not help you trade. That would help you maybe average down or keep adding size when you're wrong. When emotions get involved, typically trading results go down. So even just having a journal, it talks about your fear and greed, overconfidence. What are you feeling like? We'll get into that in the next slide. Types of journaling. This could be digital. This could be on paper, whatever fancies you. But a basic journal. Super simple. Maybe you don't want to be overwhelmed, but you want to keep track of the instrument, the day, the time, and if you made or lost money. Pretty simple stuff, and you could just do the instrument. And I think that at a minimum is what you need, but make it your own. It's trading. You're your own boss. You get to have freedom within what you want to track. To get a little more detailed, you could add everything above from the basic journal, but then maybe market conditions. The market on a one day is at this location, and so I'm looking to, then we'll go into type of strategy. we're looking for a mean reversion, or we're looking for a swing. We want to continue to ride momentum. There's, start getting more nitty gritty in what the market's actually doing. And then you can even do MAE, which is total drawdown from entry. You may close a position in profit, but if it went down, if you get into a position, it goes down 50 points, and then you close it for a 5-point profit. It's not necessarily a good trade. So you can start tracking things like that. And on the other side, the MFE, how far the market went up before you took profits. This may start giving you some data on, if the market's up this much, maybe I trim some. There's a lot of data to think about and to strategize around. Back to the emotional journal. It's so important because this is, we are all fight or flight type beings. Our amygdalas are always firing, and trading actually will do that, especially if you have too much size. But what are you feeling as you are trading? Are you bored? Is your heart rate up? Are you forcing trades and feel angst? This is a journal about being in tune with your emotions. It'll actually help you sit on your hands as well. If you are bored and you start writing about it, you'll reveal to yourself that you don't need to make a trade. If you're not sitting there journaling that, you may be quicker to just enter a stupid trade. So there's a lot of trading data, but also keeping track on your emotions in your mind. Digital journal or paper. There are benefits to both, and this comes down to personal preference. I say that because I've used both and currently use both. Some people find handwriting, everything helps them understand it better. You can't just glance at it. If you're writing about a loss, it may make you, may make it hurt a little bit more. It may make you digest it internally more than just glancing at a loss. And some people don't keep up with the emotions, just want the basic data to tell them, hey, I trade good during power hour in the afternoon on Tuesdays and Thursdays, and so that's the only day I'm going to trade. So it's really trying out both. And a lot of these online journals do have parts where you can type out, emotions and strategies and stuff. So I put some that I'm aware of. I have no affiliation with them. NinjaTrader has no affiliation with these journals. These are just some I'm aware of, some that I've used. TradesViz, TraderView, TradeMetria, I think is maybe how you say it, and Journalytics. A lot of them you can connect directly to NinjaTrader. It'll pull your trades, obviously for a monthly subscription, but I actually get a picture on the next slide, show you some of the stuff. I mean, it's this. If you get all of this data and you're not having, you may have to upload a CSV, but sometimes you can just have it directly connected. And it's giving you all this data. Wednesdays, look, this person could say, Mondays, I'm trash. Thursdays, I'm meh. I'm just going to trade on Tuesday and Wednesday. Because look at this. Now, ideally, this data would have come from hundreds of trades, thousands of trades, and years of data. Having maybe 1 week of sample data is not going to tell you a ton. So the sooner that you start to journal, the more you'll get to build your data and actually get some actionable insights. Tell you months, maybe how big your biggest losses are, biggest winners are. I know within NinjaTrader, there is a built-in kind of journal thing. It's definitely not as pretty as this. It is there. I don't use it. I like these. And this just gives you so much valuable information that you can ideally trade around these certain things that it tells you. So this is just kind of types of journals and ultimately ways that you can journal and why you should journal. So hopefully you start to keep a journal for performance evaluation. And trade safe, start journaling and getting data, and you'll ultimately be better off for it. Cheers.